I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our shows. Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. We're back for another one. Today we've got the market's already moving. A big drop across a lot of different markets this morning. And in this video or in this live stream, what we'll do is we'll react to some news that's already come out, as well as some that's on its way. We've got an eventful day, to say the least. You know, between economic data that came out this morning as well as earnings later on, it's a big one. So let's go ahead and jump in just a little bit in terms of what's moving the market here this morning. The dollar index jumped here on what was basically, in fact, let me pull up Forex Factory for a second. So the dollar jumped specifically at 8:30 a.m. U.S. Eastern Time. On this figure right here. This is the employment cost index. And remember that, and this is another way of like saying employment, right? Or like jobs, wage growth kind of metric. The employment cost index, or the ECI, gives us a bit of information about the cost of labor, right? So if we see, and let's kind of walk this back for a second. If you were to just take a look or take a survey or a piece of information like this and say, you know, is hiring becoming more expensive or less expensive, right? In a strong economy, you would expect that hiring would be strong. Like businesses are having to pay up for good talent because they have a lot of work that needs to get done. They have a lot of demand for that work, right? So in a good economy, hiring is a solid, driver even of inflation. Because when people are getting jobs, they're getting paid, they're going to buy houses and cars and everything else. They're traveling, they're spending money, which again, that's what drives prices up and also kind of continues to cycle the economy and make it strong. So what we got out of the US here this morning was the ECI, the employment cost index. The cost of labor was higher than what was forecasted. And this caused the market to actually freak out a little bit. Why is this? Well, because even though a labor market that's strong is a good thing, especially for people who are getting wage increases or they're getting jobs or, people are employed, that's a good thing. And don't get me wrong, that's positive. But what the market does not like about that so much is that when jobs and hiring is becoming a frenzy, not to say that we're in a frenzy hiring phase, but when we are looking for interest rates to come down, that's what the market wants to see. They want to see the market chilling out a little bit, cooling off a little bit. A red hot labor market is not what the market wants to see, because what that means is a red hot labor market means red hot inflation. Red hot inflation means no rate cuts. No rate cuts means yields stay high, higher for longer. It's problematic to the story of certain areas of the market that are really looking for rate cuts to happen. So I'll start with the good for my positions today. I'm short on the Russell. This trade is in the green. We're floating at one point here this morning. We were up about one times my risk, 1x my risk. So let me change that color. So we had put a stop just above this area here on the Russell 2000. This is IWM, an ETF that tracks the Russell 2000. So I shorted this yesterday, and so far it's looking like a pretty good entry. We'll see if this can hold out. We're starting with a good. I'll show you a trade that went against me here this morning on this data as well. So markets has come down here. I do think that we have the potential to go back and retest the lows, especially with just this data that's been coming out higher than expected, hotter than expected. Labor market looks strong. You have all this picture of an economy that doesn't seem to be slowing. And if you have an economy that's not slowing, that presents a problem for the inflation story. So
inflation.
Exactly right. Jerome Powell just commented in on that. So here's the thing. With this inflation staying sticky, the thing is we have the Russell looking less attractive, in my opinion, because the Russell is smaller cap companies. These are companies that are small businesses that are growing, small to mid cap businesses that are growing. And in order to grow, they rely on borrowing costs. So higher borrowing costs do for a longer period of time cut directly into their bottom line, but also into the potential of an economic recession, right? The real fear around higher rates for longer for the Russell is not just borrowing costs. Really, it's the fear of a potential recession if the Fed keeps rates too high for too long. So yeah. What's wrong with your shirt? I'm sorry. I should not wear the shirt. It's all buggy on the camera. Does that look really weird to you guys? I apologize for that. Anyways, yeah. So the Russell looks less attractive here because of it. That's my my point here. Now, specifically, what we can point to why the Russell's down, why also gold and silver are down, for those of you who trade gold, silver, etc. We're talking about the same thing here. If you're talking about the Russell and talking about gold, they're typically going to move in the same direction. Not always, but often enough that it's worth mentioning. So we have the 10-year yield rising here today off of what was strong economic data or inflationary persistent data. That rising 10-year means, again, the bond market thinks rate cuts are not coming as soon as people were thinking. And that's been a theme. That's been a theme of the last several months. It's partially been why I'm not overly bullish the stock market, and why I'm not incredibly bullish gold right now. Gold taking a hit on this data makes a lot of sense. Same reason for the Russell taking a hit. It's because higher for longer means interest rates not coming down, and interest rates not coming down is hurtful to the gold market because a strong dollar means weak gold, right? For those of you who are watching gold, we're sitting at a pretty key level. Nick, what is the Russell? Small businesses. It's an index of 2,000 small to mid cap companies. It's something that I trade pretty frequently recently. Shirt looks great. Thanks, Lee. Lee's always got my back. Appreciate you. Very nice. That was a good one, James. James is on the soundboard today, so give it up for James. We got James on the soundboard. Very nice. Hey, No, you guys must love them. Listen to that. You guys are going crazy out there. Imagine how cool that would be. Imagine if like the audience could somehow, like everybody at home has their mics and they could like suddenly like be given a second to chime in and like say something or cheer or something. That'd be hilarious. Anyways, so let's keep talking about this. So the gold market, again, tagging support, but is support going to hold? That's the question. And in my view, I've pointed out recently, a lot of people have been asking, Nick, you're going to get back in. The pullback is here. Chris Pulver came on the show yesterday. He made a point that I agreed with a lot. This is like the first pullback that we've really seen on gold, like the first meaningful pullback. But it's not necessarily over, right? You had this just incredible run. And perhaps it's fair to say that we do see a retest of 2280 or whatever this level is. What is this level? 2290, right? Maybe we're headed a little bit lower. Maybe we're pulling back. My theory here with gold is I'm so neutral on it because economic data being strong, not very good for gold, right? That's confidence in the economy. That's persistent inflation, meaning a strong dollar, not great for gold. What is still bullish for gold though? Why am I not just bearish on it? Well, there's a lot of geopolitical tension in the world. There's also a lot of de-dollarization concerns that seem to be flaring up, a lot of central banks buying gold. There are reasons, in my opinion, to stay bullish on gold. It's just that I need that economic data to start sliding for me to really get bullish gold. If we see the economy in the US start to show prints of weakness, I will be in a long position on gold, almost certainly. Now, let's talk about a losing trade for me. Here's silver. Silver not going my way today. So with this, yep, exactly. Little sad SpongeBob sound. So I've got one winner here. I've got one loser. I'm short the Russell. That's going great. I'm long gold, long silver, and this one's not turning out so good. So you can see price came down to support. I bought this support level, and we went up, but this candle not so hot. Came right back down, and today's economic data coming out strong, cost of employment going up. That is not great for my silver position. So I do have my stop loss is just below. If I get stopped out, I get stopped out. I'll show you the P&L. So SLV, I'm down $777 on this one, and the Russell IWM, I am up $1,032. So take it all with a grain of salt. When you see people on social media talking about a trade or, a winner, just be careful because, I could, you guys know I wouldn't lead you astray. I'll always show you my good and my bad trades. But 99% of all my trades are 100% profit. You hear that? That's a sound bite to save forever. Okay. So here's the thing. What I could do, and I'm not doing this, and I would never do this to you guys. You guys know I respect my audience too much. You guys, I respect you guys. So listen to this. What a lot of traders will do on social media is they will show you this trade. They will not show you the trade gone wrong. And what that produces is you watching this. If I only showed you this trade, right, you'd say, wow, he's up $1,000 today. That's fantastic. But remember, you can pick and choose on social media. And so some people will act like they just never lose. And I find it incredibly frustrating to watch a lot of traders. I really respect traders who will openly discuss losing trades. Obviously that's why I do it, but also because, I feel like I can trust those people and learn a little bit more from them because they're not just acting like they never lose, right? Think of any trader on social media, and do they show all their trades, their balance of winners and losers? Because nobody's winning all the time. The markets are just not that predictable. And I could rant on this topic for an hour, but we won't do that. So let's keep moving. So let's talk a little bit about this dollar index. The dollar index up today makes a lot of sense because again, you had strength in that number that showed, the labor market continues to be strong here. We also, by the way, in 30 minutes or so, 25 minutes or so. Nick, try resharing your screen. We can see it, but there's a bit of lag. Yeah, let me try that. Sorry about that, guys. Hold on. Stop screen. All right, let's try it again. Yep. Try this. I'm drawing a star right now. Okay. Is it better? Are we good? Hopefully we're good. Better. Cool. Thank you to the production team. Guys, round of applause for the production team. Round of applause. Very nice. We're doing a trading battle this week. I don't know if you guys remember. Was anybody here for our last trading battle? We did a trading battle during the Fed meeting last month, I believe. So much fun. We're doing another one with Chris Pulver and I believe Gary, who comes on the show periodically. So Gary's going to be doing a show with me and Chris Pulver. It's going to be so much fun. I can't wait for it. That's going to be tomorrow. So stick around. Tomorrow's going to be a big day. Speaking of tomorrow, tomorrow we have arguably the biggest day of the week. Debatable because NFP is on Friday. It's also really important jobs data, especially after today's strong jobs data we just got. So we've got FOMC. The press conference is going to be where things get really interesting. And then at 3 p.m., that is going to be TTB, the trading battle, which is a basically, if you've never heard of that before, basically it's a battle where two traders go head to head. I'm actually going to be the moderator or the host of the event, which, oh man, that's so much more fun. The pressure of like being the one to place trades is a lot more pressure than just being the host, where I can just poke everybody and say, hey, what are you trading? Hey, what are you trading? So it's going to be fun. And that is tomorrow at 3 p.m. And the proceeds, the winning profits of that battle, they get donated to the winner's selected charity. So round of applause on that. That's pretty cool stuff. Come on. Yeah. So can't wait for that. In terms of what else is moving here this morning, gold down 1.27%. Silver, again, if I get stopped out, I get stopped out on this one. Oil is continuing to pull back here. I'd say, in my opinion, oil still looks bullish as long as we hold that 81 level. If price comes back and retests, I think that's fine. As long as the bigger picture stays intact, which is, again, bigger picture is 81, kind of remains that shelf level. I mean, if you break 81, now you've got potentially the falling out of this upward trend that we've been in. So yeah, that's going to be something to watch out for. In terms of setups here today, let's take a look at the Edge Finder's top setups page. And we'll see what we've got. So currently we have got SPX500, copper, Aussie Kiwi, dollar yen, Euro Kiwi, dollar CAD. So these are some of your more bullish readings on the Edge Finder. You also have a couple more: dollar Swiss, pound Kiwi, dollar ZAR, and the DAX. Okay, let's flip it around, take a look at some bearish readings. And real quick, what do I mean by bearish readings or bullish readings? This score, just for newcomers here, we use this every single day on stream to spot potential setups. When you guys see me in trades, 9 times out of 10, the reason I'm in those trades is because of the Edge Finder's scoring system, which takes into account sentiment data like the commitment of traders data to track institutional money flow, retail positioning, seasonality, the trend of the market, momentum wise, GDP figures, PMI numbers, retail sales figures, inflation statistics, and the job market in terms of employment and unemployment rate, and interest rates. So we look at all this data, and this is all done automatically. This is not done by hand. I used to do this by hand years ago, and it made my trading day way longer. Now my trading is like an hour or less per day, which is preferable. I don't have to spend all my day in front of the charts. I can look at my stuff here, and most of my trading happens right here on these live streams. This live stream is where I do a lot of my analysis, do a lot of my breakdowns, looking through stuff, and then I place trades. And so I keep my day short. I think, somebody asked me why I swing trade over day trading recently. One of the biggest reasons that I prefer the swing trading side of things is because I can do other things in my day. I mean, with my own day to day, I'm running this business, A1 Trading. So a lot of my time is spent just kind of dealing with day-to-day business stuff, software development, helping our team out with whatever we're working on, content creation. So a lot of my time gets taken away in doing that stuff, which I also love doing. But in terms of trading, what I love is with swing trading, I've got it down to like an hour or less a day. And that is totally ideal for me. Anyways, yep, there it is. Hi, Nick. Just enjoying my first day of the Edge Finder. Thanks. Hey, Fabio. That's awesome to hear. Shout out, Fabio. Very cool. Good stuff. So let's see what else. In terms of bearish setups, Euro USD, I am still short the Euro. So I want to go check on that trade. Pound dollar getting a bearish read, a lot of dollar stuff. Russell flipped up into -4 camp, which is back into neutral. But when I took the trade, it was giving a bearish reading. So by the way, if you do want a copy of the Edge Finder, here's the link. Thank you to the producers for dropping that.
Edge Finders. Let me get one of those.
Yep. So our sale is ending. Well, today. Today's the last day of April, right? There's not a 31st of April. So today is the last day. If you have not already gotten a copy of the Edge Finder, we're doing our biggest sale of the year. And for people who've been here every day, apologize. Got to give my quick sales pitch. If you do not already have a copy of the Edge Finder, it's currently 40% off. But if you're watching with us live, we give an extra 5% just by sending a message to our staff behind the scenes who can get you set up with a copy. If you click the link right here, it's in the chat, or if you're watching this back, there's a link at the top of the description of this live stream where you can send a direct message in and chat with someone on our staff. Again, it's a real person. We do this so that you can ask questions, make sure it's the right fit for you. We don't want to sell you a product that you're not, fully, interested in and think will actually fit your trading style. It is good for both day traders and swing traders. Our price is a one-time price. You pay one time, you get a ticket, you get access to the tool. You can use it every day, which to me, I designed it that way with our pricing because that's what I would want. If you see yourself trading in 5 years, the cost of the Edge Finder stripped out into like daily price is like nothing. It really is. If you see yourself trading long-term and using fundamentals and you do not have a copy of the Edge Finder, here's my pitch. The price is going up. It's basically going back to double what the price you can get today. And that's the last chance. Again, we're raising prices throughout the year. We are not going to do another sale that gets it down to this price. We might do another 40% off at some point this year for maybe Black Friday. But let me give you this warning. If you're waiting, you're like, I'll just get it Black Friday. The price will be higher because the overall cost of the Edge Finder will be going up. So don't hesitate. If you've been thinking about it, I'm telling you, a lot of people will message in next week and say, hey, can I get the price? And again, that is ending today. So check it out. Does anyone know this guy's strategy? I talk about it every single day. There's no secrets to my trading strategy. I use a combination of fundamental analysis and trend following, simple price action. No bells and whistles, very simple technical analysis in combination with fundamentals, which we talk about predominantly on this channel. Fundamentals are huge. Why did the market move this morning? The answer is all in the data. The data tells a big story, and how that data tells a story is what drives us to take longs and shorts. Announcement. Where's this announcement coming from? The Fed announced to keep rates high. The stock market is officially crashing. Claim your profit before it's gone to crash here. I don't think the Fed announced that. Just a little bit of clarity to everyone. I don't think the Fed announced that.
The economy is strong.
Yep, exactly. Okay, so let's keep it moving. Let's take a look at some other charts here. I am short on the euro, which has bounced here a little bit this morning. So I'm short the euro. This trade has done not a lot either direction. So I do still think that the dollar looks strong. I think that the euro relative to the dollar looks less attractive. So I am short on this pair. My stop loss is just above market structure here. If price rips through the highs, then I will take a loss on this one. So I'm watching the euro for downside. We'll see if I'm right about that. Pound USD hitting resistance, and you can see it on the daily chart. It's hitting a pretty key spot. If I didn't have the euro already open as a trade, I'd probably look at this one because, again, I've got this is what a 61.8% retracement. Yeah, so 61.8% retracement getting tagged here on the daily chart for the pound USD, hitting a key level of resistance. I think I like that to the downside. Not to mention, you have confirmation from the Edge Finder. Let me double check that. Yes, pound USD giving us a bearish reading. after looking through sentiment, technical, and economic data, we're leaning bearish. So again, why am I not taking this trade? It's because I already have a highly correlated short on the euro against the dollar. Plus, it has a slightly higher conviction to the bearish side. So that's an interesting one today in terms of price action. Pound USD coming right up into this is probably a nice little trend line here. I can't lie, that's a really clean technical setup. We'll see if it works out. I would say, again, when it comes to, I just want to clarify something too. For the new traders who are just tuning in to our show, we do this Monday through Friday, 9:30 or 8:30 a.m. each day. Just depends on what's coming out news-wise. We're usually covering the big news events. I want to just clarify, when I share an idea or a thought on something, I'm not telling you what you should do with your own account. I'm not here to give you, hey, buy this, sell this. I'm not here for that. I'm trading my own money. I've got my own, trading to do. I share my opinions here, my own analysis, and sometimes I get it wrong. So just because I think this looks really good does not guarantee that the pound dollar is going to drop like a rock from here. Most of my indications that I'm looking at are telling me this is looking pretty bearish, right? You've got a downward trend. You've got fundamentals leaning bearish. You've got what is a short-term overextension to the upside, hitting a key level of resistance and the 61.8%. I like this setup a lot, but I'm not telling you, hey, go short this thing with everything, because you might see this thing rip higher, right? Just because, and this is the difference between people who understand how trading works and people who do not understand how trading works. Just because you line everything up does not mean that the market just moves perfectly in your direction. You might line everything up and have a great setup and have a 55% chance that it works out. That's what trading really looks like. You can be pristine in your approach, and if you're good, you can have a 55% chance of predicting where things might go next. Does that make sense? If that makes sense to you, type yes in the chat for me and hit the thumbs up button on the stream, because what I'm trying to get at here is that there's no certainties in markets. Markets are really hard to predict what's going to happen. That being said, you can take into account lots of different data points, key statistics, key metrics, key, price action. You can take it all into account. But where you will find yourself infinitely frustrated is if you think that combining all these things will make you certainly know which way the market's going to go. That's where the disappointment and where the account blowing and the over leveraging, that's where that comes from. Traders get overhyped. This is a good looking setup in my opinion, but it doesn't guarantee that the market is going to go down. Are we all on the same page with that? Do me a quick favor. As always, that is not financial advice. Smash the thumbs up button if you understand that concept. It would be helpful to the stream. So yeah. Let's take an updated look here. Stock market's been open for about 18 minutes here. S&P 500 recouping a little bit of its losses, but we do still have, like I said, coming up here in just about 10 minutes, we have consumer confidence, which could move the market up or down. We'll just have to see what that brings. Consumer confidence, of course, if you've never paid attention to economic data, let's do a lesson in consumer confidence. It is exactly what it sounds like. It is a measurement of the consumer's confidence. And this is a powerful indicator. In fact, I really like these kind of things, PMIs and consumer confidence. I really like, because it's arguably more forward looking. Think about this. If we all did a survey, there's 424 of you guys hanging out with me between the two YouTube channels that we're streaming to. If we did a survey here, like how many of you guys plan on traveling this summer? And we asked you that every month, and we indexed the values of the percentage of people said, I do plan on traveling, 3+ hours away. I'm just saying this as an example. Just curious, how many of you guys do plan on traveling this summer? Type yes or no. The reason here, what the data surveys here are trying to get at is, do people have enough extra money laying around to go travel, or are they too tight and there's just no money for traveling this summer? Stuff like that, right? That's what the consumer confidence helps us to understand. And again, so many people they love to just say, oh, fundamentals, just ignore them. I just avoid red folders. Think about what we just talked about. That's really real stuff. That's fundamentally very important stuff to try and understand what the consumer is feeling? Are they feeling the pressure of inflation? Are they like, we can't afford to travel this summer? Or are they feeling, like they got a raise this year and they're going to go take a trip, Headed to the Bahamas in August. Nice. Headed to Colombia. Very cool. Gas prices will be sky high this summer. That feels like a given these days. Yeah, cool. Got suckered into a cruise. All right. There's worse things to do than go on a cruise, I would say. Anyways, yeah, so consumer confidence comes out in here just a little bit. Should be interesting to see what that does to the market. Sometimes it has a big impact. Sometimes it does nothing. So we'll just have to see. Again, for those just walking in, I am short the Russell. I am long silver. One is going against me. One is going for me. And I'm flat just about on my euro short. Okay, so let's see. I also want to take a look really quick at, what am I looking for? Sentiment, retail positioning. Okay. Here's also a quick updated look at the retail positioning currently. What we see here, I thought this was kind of interesting. Retail traders very short on the S&P 500, USD CAD, USD CHF, and maybe not so surprising is dollar yen. So retail traders are very much, I noticed this, a lot of, let's actually do just currencies for a second. A lot of yen pairs, look at this, euro yen, pound yen, Aussie yen, Swiss yen, CAD yen, dollar yen, Kiwi yen. Every single yen cross on the Edge Finder, what it's showing is that retail is shorting the move that's been happening recently with counters to the yen. What that means is retail traders are buying the yen big time. And the yen has been falling off a cliff. It's really, really had a tough couple days. Now, what I want to point out with this is that when you see these tendencies, this didn't just start. Retail traders did not just start getting short on like euro yen, right? They didn't just start getting short on euro yen. They're stuck in trades shorting the euro yen, right? Again, we can see this in the data on the Edge Finder. We have that retail positioning so that we can track this stuff. Look at this. So as retail gets more and more short, they're not short from up here. They're short from like over here, right? They've been short and holding on to a terrible losing trade. And we've seen this data over time. Another one is pound yen. So if we go look at GBP, JPY, and we say, look at this chart. So as this thing continues to trend higher, this is a pattern that we talk about regularly on the streams. Retail traders are betting against this trend. Now, that's actually on our software. We use this as a contrarian indicator. So when we see a heavy bias to short something, we actually get bullish indications on those things. So if I'm looking at, Swiss yen, CAD yen, for my currency traders in the room, keep this on your radar. If you have the Edge Finder, always give a quick check to retail positioning because it can be very useful. Again, when you start to see these polarizing divergences, most of the time, I'm not going to lie, most of the time, retail sentiment's not that useful. Like when it's just like a 50-50 or a 45-55, it doesn't tell you too much. But every once in a while, you get these kinds of moves where something is like 75, 25. That's a pretty stark indicator that retail is stuck in a bad trade. And when we spot retail stuck in a bad trade, it doesn't necessarily mean we just go long right here. But look at how this happened, guys. Pullbacks on pound yen yesterday were beautiful, right? If you bought that intraday, if you bought dollar yen intraday, there was beautiful pullbacks and buyers just ripped through this. Meanwhile, retail traders are just betting on the wrong side of the trend. So I talk about this pretty regularly. Retail sentiment is not the holy grail. A lot of traders will look at this and they'll say, that's all I need. I just need to counter the retail trader. And while that is a useful indicator, and that's why it's in our sentiment tools for the Edge Finder, it's not the only thing. We also look at economic data, etc. Again, if you do not have a copy of the Edge Finder, the sale is closing down very, very soon. You get 45% off if you do not have a copy. Click the link right here. Send us a direct message. Get your copy locked in today before that sale ends. So yeah. All right, let's keep moving it here. Let's take a look. We're getting real close here, guys. We're about 4 minutes away from consumer sentiment. I'm sorry, consumer confidence, which comes out in, like I said, 4 minutes to go here. We'll see if that does move anything. There was a stock that I wanted to talk briefly about here this morning. PayPal's earnings came out, and ooh, wow, this really reversed. PayPal's a stock I actually would like to buy some of. I was actually hoping that they would have, poor earnings, and it seems like they kind of had missed earnings. Let's see. Their actual income came out lower than expected per share. Earnings per share came out 1.08 compared to the estimated 1.22, let's call it. So not very good there. Revenue just barely was higher than expected. So PayPal, if we do get a sell-off on this stock, I will probably pick up some PayPal at some point. I have several stocks that I'm watching here today. I'm going to sort them by sell-off. Look at SoFi. SoFi, I don't own any SoFi, but this is an interesting, kind of a spec stock, to be honest. I don't look too often at stocks, and you guys know I don't spend a tremendous amount of time individual stocks, but there are some growth names that I'd like to pick up if we do see a broader sell-off in the market. I'm going to keep this. I have no ownership of any of these stocks at this time, but these are some of the ones that I'm looking at, mostly growth names, if we do start to see a bigger correction in the stock market. So where are we at with that? Well, again, yesterday, Frank and I both kind of were looking at these levels here on the NASDAQ and the S&P 500 as potential resistance, troubling resistance, I guess. That's the question, is whether or not this will roll over or break out. And so far, it does seem like it's at least getting some respect here. S&P 500 seeing some resistance. If we do, and just context for why I showed you that stock stuff, if we do start to see a bigger sell-off, that is probably where I'll start to buy into some of the names that I'd like to have in the portfolio long-term. Would you prefer trading options or futures? And do you think they're compatible with small capital? The way I trade options is not incredibly built for small accounts, to be honest. But there are adaptations to what I do. I trade a really simple, no secrets, no magic, no fanciness way of trading options. I sell puts and I sell covered calls, also known as the wheel strategy. And selling cash secured puts is a very capital heavy way of trading. However, you can do several ways. There are several ways that you can reduce the margin requirement in order to do some sort of wheel strategy. You just won't get assigned. And I don't want to go into that because, again, 95% of people in the audience do not care about that topic. But for those of you who do, you can search up, I believe it is put credit spreads. Chris, is that right? I can see you. Nod your head. Is that put credit spreads? If somebody wants to reduce, yeah, okay. Put credit spreads are if you want to. Here, we'll ask Chris in just a second. Real quick, guys, we're going to roll a quick break. We'll bring him in here. He's the options guy. I'm so basic when it comes to options that I'm not your guy. So coming in just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, Chris, and welcome back to the show. Real quick, before we talk about the option stuff, let's just react to this consumer confidence number that is coming out here momentarily. How you doing, Chris, by the way?
Good. I'm just getting a couple trades in, so just if you give me
Okay.
like 30 seconds, take the
Yep.
show. I'm
Yep.
getting a
I
couple
got
trades
you.
on the spy. Okay, thanks.
So consumer confidence just came in a little lighter than anticipated. We've got a reading here of 97 compared to the forecasted 104. So consumer confidence coming in a little bit light here. Let's take a look at how that might impact the market. So far, not a huge reaction. NASDAQ, if we take a look at the 5-minute chart, you're getting a slight blip, but really not a huge dramatic move in either direction as of yet. I mean, this is a 5-minute chart, so really no reaction whatsoever. Russell down 0.8% on the day. The Dow is down 0.6. The Nasdaq's down 0.25%, and the S&P is about just the same. Overall, you take a look at other areas of the market. You got the dollar index continuing to push higher here this morning. Found a little support around the 105.6 level, let's call it. And if you take a look at gold and silver, both down on the day. We got gold down over 1%, silver down over 1.8%. So pretty stark movements there on the metal side. Oil also back down near to that 81 level that we talked about, guys. So we're seeing a bit of a pullback here to that 81. I mentioned this earlier. If you're watching oil, I think the upward trend is intact unless you see a failure at 81. So if we hit like 80, I'd say, yeah, we probably broke that upward trend here, at least for the short term. So we'll keep an eye on that. Chris, I was mentioning earlier that for people who are looking to get into options but don't have large capital bases, I believe if you want to do, where you don't get assigned, you do a put credit spread, right? So you collect a credit if the market goes sideways, slightly down, or up. Is that right?
You can still get assigned on credit spreads, but here, if you
Okay.
like, we can just walk through a quick example. Credit
Yeah.
spreads are great for the smaller accounts. I can give an example. What's the stock you're looking at, Nick? So we can use one, and I can show you what the buying power would be and a reduction in your account. I can show you what the risk reward looks like, and
Let's
also
say
talk about
PayPal.
the potential assignments. PayPal. Okay, perfect.
PayPal just for fun.
All right, cool. Let me share my screen here so Chandler can pop that in if he needs to, and I'll type some notes up. So share screen. We'll go PayPal trading at 68.23. Okay, so let's talk PayPal, and let's say that you like the stock and you want to take a trade on PayPal now. And rather than Nick, if you were to do a put, you'd probably do like maybe a $65 put or $62 put, and you're putting
Yep.
those cash secured puts at levels where you're like, look, if I own it there, I'm happy to take the assignment. That's a price I'd be comfortable with,
Yep.
and it's going to take the capital. If you did 100 shares of PayPal, you're going to tie up around $6,500 at a $65 strike. So a way to do that, here's what makes it. I'll do this with a cash account, so this will not be with margin.
Yep.
And that way it's just true value. So if I did, let's go to this account right here and go to PayPal. And if I did, let's say I want to see PayPal, if I wanted to buy it, we just had earnings on it. If I want to buy PayPal, let's say at $60, let's see if I can get any premium for a $60 strike. So if I go out like 30 to 45 days is typically a nice little sweet spot. There's 38 days or 52 days. I'll take the 52, and that should allow me to get some premium. So if I went $60, I could get 56 cents for it per contract. So if I did 100 shares or one contract, I'd get $56 of income, and price would have to fall below $60, which is, falling $8 and change, which is over 10%, right? And that's not bad. Like, you're giving yourself a big discount. You're getting paid if nothing happens, if you don't get assigned. But
Yep.
the buying power would be a reduction of that $60 strike is going to be $6,000 in buying power. And the reason it doesn't say $6,000 from a max loss is because I'm still collecting that 54 to 55 cents. But
Yep.
I'm tying up all that buying power to put in that cash secured put. So
Yep.
to make this cost effective, this is out of the money. But if I did a 60 by 57.50, now it's a $2.50 spread. I can still collect 25 cents of income. It's only going to tie up now $226. So I went from tying up $6,000 to $226. And Nick, on your cash secured put, if you did that, you're making 56 cents on a credit spread. I'm still making 24 cents.
Right.
So I'm
Right.
making about half the profit with, a tenth of the buying power reduction.
Yep. Yep. Exactly. Thanks for breaking that down. I always get the names mixed up. Frank's like, I'm doing a butterfly thing, and I'm like, Frank, you gotta like draw it on the board for me because I
Yep. Did you
I
guys
get it
still
all
leave that
mixed
on
up.
the board when I was there? You still have the broken
It was
butterflies
there
that
for another
help?
day or two.
Yeah, I know, it's
Frank and I
funny.
kept looking at it. We're like, this is fascinating stuff.
Beautiful
Um,
mind.
Yeah, exactly. So, Chris, today we got Amazon earnings after the bell.
Yep.
We had some data that came out this morning. Little inflation sticky data. Employment cost index was higher than expected. How much is the Amazon earnings going to move the market today? Is that a big mover for the indices?
I think it certainly can be. I mean, just like Google and Microsoft and Meta were last week, they can definitely play into it. I'm curious. So let me go to this today. This is what I'm really watching. I said this last week. I mean, either coming into the Fed week, we're going to see calm before the storm, where nothing happens, and so far that seems to be what's the case. Is Monday's trading was very quiet, little fake out here, finished back where it started.
Mhm.
Today's opening bell range is pretty tight. I will be looking to see if we break today's low or break today's high for any type of directional play. But Nick, it wouldn't surprise me if we just stay very tight, very contained, and then it's just like open up the floodgates for Fed tomorrow. So
Yeah.
Amazon could possibly have its own individual move, but it's going to be I think it's going to be a pretty wild week on Amazon. Good, bad. I mean, I would not expect earnings on Amazon to be terrible. Um, let's see. The last time, I mean, let's just go through their daily chart because I feel like we've had mostly green. Hang on a second here.
Yeah. Yeah. A lot of really positive earnings numbers for
That's what I thought. If I
Amazon.
go, my charts are freezing on me for some reason. That was weird. Let's go daily chart here then. Daily chart, Amazon. There we go. Okay. So we just compressed these. I mean, earnings positive, 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 negative,
Yep.
positive. Mostly, I mean, you're going to see the high majority of earnings be positive for Amazon. We're sitting here at all-time highs. Google last week cracked fresh all-time highs. I could see Amazon doing the same thing. I mean, a good print. If they certainly talk about AI, talk about web services, how their growth is, what it's Amazon. I mean, it
Right.
logistically the best company in the world. I think that it has its hands in a lot of stuff that it wants, and it's going to make a bunch of money. A pullback is still totally fine, and I'm long-term Amazon anyway. So even if we have pullbacks, I do have cash secured puts on Amazon at the 150, 140, 130 areas. And I'm also long with some diagonal spreads, which mean I'm just taking calls and trading synthetics where I don't want to own the shares right now. But if I want to own them, I'm getting a sign at those put levels. So we'd have to drop to fill me at those prices. Otherwise, we crack all-time highs. Anything above $200 is pretty good for me, and we'll find out. I mean, I think Amazon is, what is it market cap wise? We're at 1.89 trillion. I want to
Yep.
say Amazon's like top 5. So you've got Apple, Google,
Sounds
Nvidia,
right. Yeah.
and probably Amazon's in there like top 4, top 5. It's certainly enough to move the market, but I just don't know. Let's go back to the SPY. IB today's 30. I mean, you're still pretty quiet. We should only see, it's going to be like maybe a $3 to $4 move on the SPY today from what I'm calculating. Um, I did take this trade if you're interested, Nick.
Yeah.
So on the SPY today, I'm looking at the weekly candle. So far for the week, it's been a very quiet week, and we're already 2 days into trading. So what I just took on the SPY I do this a lot for my earnings trades. Frank and I talk about this offline because this is such a quiet candle so far. I basically said, look, we're at 509, so I bought a 510 call and I bought a 508 put. And then I'm putting a spread on that. So I did a 498. This is by 498 put. And this is a 520 call. So these are both debit spreads. This is going to be a bull call spread. And this is a debit, not a credit. And this is a bear put spread. But what I'm looking for is if the market's going to deliver some volatility Wednesday, Thursday, Friday, I don't really care what it does, but as long as I can get like a $5 move out of the markets this week, one way or the other, that's enough for me to make some money on the trade. So
Sure.
I'm trying to get $10 profit here. It's roughly a 1-to-1. So if I let it hit my profit target, if it hits 520 or 498 or exceeds those levels, then I'm maxing my profit out at $10. But still, I'm going to take the chance on volatility being delivered this week and hopefully have some follow through, post Fed tomorrow.
Yeah, it should be an interesting last couple day or a couple days ahead with everything from the Fed tomorrow, and then jobs on Friday, Apple's after the bell on Thursday, Amazon today. So there's a bit of everything, or a bit of something for everyone here when it
Yep.
comes to market data to look out for. I still have a small short on the Russell. Chris,
Okay.
part of that thought process short term is that we've just seen a poke higher in the yields world. And I think that, I think there's a pretty good chance that we don't necessarily see an outright hawkish commentary on Wednesday, but I think we might need to see, or I think there's a good chance we do see some more aggressive pausing from the Fed. I mean, we've just had so much data that's come out, and you can see it. I think you're pulling up the Fed Watch tool as we speak. Yeah, like you can see it forming in the Fed Watch tool. The market is starting to say, hey, look, September is even questionable. There's just been consistent labor market strength. The consumer's not cracking and rolling over. And it's probably linked between those two things. People are employed, they're still spending money. And as long as that continues to be the case, what we're probably going to see the Fed kind of admit or say is that inflation is not all supply side. It is also demand side, and that it's going to be a problematic and tricky thing to get lower. So I love that environment, Chris, because what it tells me is that I love when there is a bear case in the stock market. And that's, I still think earnings will be great. I think technologies will continue to advance. I'm a bull in the stock market, but I love when there's a bear case present, because then the risk to reward becomes a lot more attractive.
Sure. You're saying that as far as just, waiting and buying and having the courage just to load up on these discounts?
Yes.
Yeah.
Yes. But then also, specific to like a more short-term trade,
Mhm.
if we, get that sort of commentary from the Fed, and then, Apple smashes earnings and things look pretty good and there's a pop,
Right.
I'd actually buy that pop, because
Right.
yes, you have concerns about, the Fed being adversarial, that sort of thing, but the risk reward just becomes more attractive when it's all obvious. That's where I like, trading the indices a little bit less.
Yeah, that's true. So one thing I noticed in our session yesterday, I mean, I don't remember if you and I both looked at the Fed Watch tool or if I did it in my previous sessions, but
Mhm.
this has already been shifted quite a bit. So tomorrow's Fed, 96% chance nothing happens.
Yep.
Obviously, it's going to be about Powell's message and language. I think he's going to continue to do a great job of talking out of both sides of his mouth. And
Yeah.
what the market interprets that to be, I don't really know. Technically, you and I both kind of agree. I like the downside more so than the upside. I think the market has a much harder time retesting all-time highs than it does just like pushing this aggressively lower for the week. That's just my thoughts. But what I noticed already is June is super high probability that, again, nothing happens, and then July also getting kicked out there. But this is what was the big change for me yesterday. This was about a 50-40
Oh, I
for
haven't
a
even seen
cut,
this. Yeah.
and September's already shifted into now a pause.
Very,
So
very
just from
interesting.
yesterday to today, before the Fed, we're already seeing that the market is like, you know what? They're not looking to do anything. And then you sit here and go another month out during the election. It's possible that they're going to maybe cut for the first time. It's like, of all months to put in a rate cut after pushing back after having the expectation of 7 cuts this year and having literally 0 until the election, it's like it doesn't make a lot of sense. And I know this is still subject to change, and this number could shift. This histogram can get way up here for the cut. It could also go back to 0. Who knows, man? That's what's so frustrating about this. But
Yeah.
just to see
Well,
it
that's the
shift from
thing, Chris.
September
The
to now, it's
trend has
crazy.
not been it's not been very nice. If you've been
Right.
somebody who's in the rate cut camp, the trend has been really, really frustrating, because you've just
Yep.
seen this consistently get pushed back. And to me, it's kind of like you trade what you see. And
Yeah.
the trend for that is, I have a hard time getting just aggressively long equities. I also pointed out, I think right as you were joining, I put together a list of, a lot of growth stocks that I personally like. And these
Mhm.
are like stocks that I really like, but I can't touch them. I can't touch them unless the market has a good old fashioned correction. If that
Sure.
happens, I'll load up on some shares, some companies, and buy the dip on the way down. You and I talked about this a couple, I don't know, weeks ago, talked about one of the best ways to outperform is to get aggressive, to get, take risks when people are terrified.
Yep.
We don't see people terrified. I, to be honest, I've made my best returns ever have been when buying, when people were just terrified to do so in names that I'd like to hold longer term. So I like that environment. I also can trade in up market too. But yeah, so just something to think about.
Yeah, and I mean, speaking of terrified, it's like if you bought the crazy dip in 2018 when the market crashed 20% at the end of the year, you bought the dip into that, Fed put in 2019, you got paid
Mhm.
handsomely.
Yep.
2020, obviously, if anything happened during a 1 month period with a 30 to 40% sell off and you bought into that, you got paid handsomely. 2022 was really the reality check, and I call this one the
Yep.
Great Reset, simply because there was nowhere to hide. Bonds were down, stocks were down, tech was down, value was down. Like there was no sector to hide. There's no bond. 60/40 portfolio was trash. Everything was tough in 2022.
Oh
But
yeah.
if you stuck with it, we still pivoted hard in Q4 and we had a broader market lift Q4 into Q1, Q1 to Q2. We had one pause in 2023. And for right now's environment, and again, I could be wrong. I was way more bullish going into this year, and it obviously was great for Q1. I was bearish going into April, thinking the market would be a little bit more sideways, a little choppy, which it certainly is. We had a bigger sell off those couple of days on early April, and then I think it was last week Monday. So I could see this sell off that we had in 2023, that little summer sell off. I could see that kind of setting up here, where we have a bit more of a correction. It just depends on how violent and volatile it is, or maybe how contained it is. The one thing we've got to give the market credit for is these sell-offs outside of COVID in 2020. These market sell-offs have been pretty contained, pretty
Yeah.
contained, pretty
Yep.
contained. So if we have another lower low over the next couple of weeks here, Nick, I think a lower high to lower low would still fit some really nice structure to then see what's the market made of if it retests the all-time highs, retest this previous level of resistance, and then maybe rips back up to the highs for a 9 or 10% rally.
Yep.
I mean, I guess my case for the SPY being way up here going into the election, it's quickly dissolving. I think that right now, if we have the market making fresh lows, maybe the
Yep.
best thing we get in the summer is going to be sideways. And then it's going to be all about the election and what drama that stirs up in the next, 6 months. Who
And I
knows?
and I do think as you kind of approach the election, there will be uncertainties there, right? People just get, they don't know what's going to happen, and uncertainty the market usually hates. So
Yep.
we'll see, though. Election years typically are bullish, and so that could be an interesting story to continue to watch. But one thing I also want to just add while we're on the topic of looking historically, 2022, one thing that a lot of people don't know, or may painfully know, is that if you were super long on growth names, this was the
Yes.
first time in a
Oh,
long
brutal.
time that you
Yep.
saw 70, 80% drawdowns, and many of
Yep.
them have not recovered those drawdowns. So there
Mag
is a
7
point.
only. That's and take Tesla out, but Mag 7 only was the recovery. That was it. I
Yes.
mean,
Yep.
yeah, you've got
Exactly.
way underperformance on. So I'm looking at Meta because Meta's crushed these levels at fresh all-time highs. And I know last week earnings weren't great, but from that 2021 to peak, 2021 peak to that 2022 correction, holy crap, man! I mean, this was
Yeah.
insane. We had 70+%, right? Yes, 70,
There
almost
there's so many
77%
names.
peak to
Yeah, there were
trough,
so
and it
many
was
names
the
like,
whole market.
Carvana, it was a big one,
Yep.
Shopify. These are names that a lot of retail got so excited about.
Yep.
PayPal is another one of them, right? These
Yep.
are these are names that lost everything during
Yep.
2022. And this is the nature of the stock market that people, they don't always see when they look at the indices. The indices typically they remove the losers and they add the winners. It's really a genius strategy over time. But it doesn't always tell the full story of how a lot of investors get tied up in um, you know stocks that go down forever or they never come back. And so it's something to think about. I do think I'm with you, Chris. I think that the idea of just a rip all year long
Mhm.
is being challenged here. I wouldn't be
Yep.
surprised if we do see a return back to this low, a retest of this low.
Yep.
But I've also mentioned several times that overall I am bullish, looking for opportunities to get long. And if the Fed comes out dovish, I will probably just be trading that higher and keep a cash reserve for when a discount does actually set up. So that's my loose game plan on it.
Yeah. And are you hosting our trading battle tomorrow? You're
I
involved in
am.
that, yeah?
Yep.
Okay, so you're hosting tomorrow. It's going to be a morning battle, which will be interesting because we're taking this the day of FOMC. So we've got all morning to do the battle. We're still going to have to kind of trade and anticipate all these positions prior to the FOMC. So I'm thinking ahead that I might be hedging a lot. I might be willing to take a volatility expansion play. I might be looking to, take some currency trades and, buy inverse correlated pairs and just see if
Mm.
I can take a small loss, take a win, and net some profit for the week. But it's going to be tough because right now, I'm staring at my charts and we're quiet, man. I mean, everything from yesterday, there's the high yesterday, there's the low yesterday. Market has not broken yet. We're pretty much dead even, 35 and 36 on call and put volume sentiment today. The only gamma level that I see that's I'd say of substance would be like this 513 to 515. And you and I both know if you're looking at a SPY chart, that is near-term resistance. So if we get there, I could see it being a test, but something tells me it's just going to be quiet. It's going to be quiet, all about the Fed. And so tomorrow's battle is going to be fun.
Yep. Yep. It's going to be a lot of fun. It'll be a big one. And of course, like you mentioned, it's going to be you, me, Gary. It's going to be a great time. And I think
Yep.
we're going to do the internally. We're working it out with them today on a call, but I think we're going to do, Chandler and James are going to do the producing, the background, which will be fun. So we'll have all the,
nice.
yeah, we're going to in-house the whole thing, which is going to be
Okay.
fun to help them out. And then should be a good time. Chris,
Cool.
I'm gonna let you keep going, take over the stream here for a little bit. Frank might join you in a little bit.
Okay.
And in the meantime, let me just also say to everybody who's watching here live on YouTube, make sure to go check out Chris Pulver's YouTube channel. He's also got a Discord channel that you can join on that page. So highly recommend it if you're not already in there or watching his YouTube channel. Great value there for you. So it's totally free, good stuff. And stick around for a little bit. Chris will show you some more cool stuff. And Chris, we'll see you back tomorrow, man.
All right. Thanks, Nick.
See ya.
All right. Bye. So if Frank's going to jump in here, I think what I'll do is I'll get started on some earnings potential because that's really a big deal this week. We have Fed tomorrow. Today's the end of the month. Currency wise, so I did have a couple things that I thought were interesting. I always spot check. So I'll show you my Discord channel really quickly. And I always spot check in my blog on Fridays. I spot check how my robots are doing. They're doing pretty well. And this week, I actually didn't update this. This needs to be 867. Let me see if I can edit this. Let me edit this. This was an 867 from last week. And that was because I closed positions manually during my live session on Friday. But I took a look at, so these are all robots that I run in Forex. I have a Perfect Storm robot. This is range. Did a little improvement to manage drawdowns better. That's a range robot. Pockets Pattern Pro is a efficiency robot. It trades liquidity levels, supply and demand levels. And it just week to week, these robots do really well. I let these run full auto. Hypertrend is a full auto trend system that I'm really proud of. Captions profits last week. And then the six-figure ultimate is a wave-based, Fibonacci-based trend system that I just checked it this morning. It's already up 1,600 pips since I deployed it last week. So I'm saying that because there's a bias that comes into my trend systems. I'm only buying against the Swiss. I'm only buying against the yen, and I'm kind of picking the other trades. I mean, I'm pretty much both directions on the dollar, and I'm letting my robots kind of take the losses on the chin and just kind of trade the flow. If we have confirmed direction, let my robots get in there with good equity management. And I mean, robots a lot of times for me can help my Forex trading and help my consistency. And what I do in the background is I trade massive patterns and I trade massive time frames, and I will sit in positions for months and months and months. And so I'm kind of a Forex investor. So I'm saying that because my trading in Forex is fairly passive. I invest in big levels in bigger time frames, and I'll sit and wait until it pays me. And this doesn't mean I'm sitting in drawdowns. This means that I am, building positions off of lows and off of highs. So as an example, really quickly in Forex, I have been in this trade for the most part of 2023 and 2024. Every low that we had tested here on this Euro Swiss, okay, every low that we have been testing, I have been buying. So when we had this test right here, I was establishing a long position on the Euro Swiss, and I was looking to see if we had a pattern and breakout. So when we pulled back, I started to buy. When we hit the lows again, I started to buy. When we had divergence down here, I started to buy. We had a trend line here, I started to buy. Broke out of this trend line, started to buy. I built into this position. All right. So now I have about 10 positions open on the Euro Swiss, and it's up, 1,000 pips. Collectively, right now in these Swiss pairs, I'm up over 7,000 pips in open positions with Swiss franc. I like doing that because it's my analysis on a bigger time frame. It's not very price sensitive, and these chunks of profit that I get are really, really nice. A lot of times my year could look like this. From January to December, okay, I might not make a lot of profit. My robots pick up some profit for me, which is really nice, and that's why I run them the way that I do. Is they'll keep trading and make me some profit every single week. But for the most part, my equity curve has like a big profit, and then it just kind of hangs out. Okay, and then a big profit, and then it hangs out. And so that's really what my year is. My trading for the Forex year is mostly 1 to 2 to 3 months of big profits, and then the rest is just steady or flat and boring. I don't know how many you want to trade and look to trade to get excited, but that's not me. I'm a trader that wants to make money, and I will try to position myself where the highest probability is. Invest in this area. Let the price go my way. It takes some time. Sometimes it takes weeks. Sometimes it takes months. But when I get paid pretty well on those injections. So I'm saying that because right now, I'm just letting the Forex stuff work in the background, and I'm focused on earnings, which if we go into this week, I know Frank and I talked about this yesterday. There's a lot of earnings coming out today after market. We have the Fed tomorrow. All the ones in yellow are some that I'm interested in. I do have some exposure on PayPal. I'm in a trade with PayPal right now. I looked at Coca-Cola, McDonald's. I looked at Eli Lilly. I tried to price in a trade on Eli Lilly yesterday. It just didn't. It didn't hit the numbers that I wanted. I'm going to look at pricing in an SMCI, AMD, and an Amazon trade today. So I could start that process right now in this session. At 11 o'clock, I'm jumping into my trading room, and I'll continue to price this out with my traders in my room. And then we have Fed tomorrow. So for the most part, I want to see there's two things that I need. If we have a high volatility expectation, great. If we also have consistent earnings reports, whether it's not that they have to beat expectations. I don't care if it goes up or down. Earnings is really a coin flip. Price can go up or down, and also sentiment plays into that. What I do care about is how often do these earnings moves hit the expected move? Because if they're high probability of hitting the expected move, then I can position that so if it hits the expected move, I get paid a good profit. And that's what I trade. So that's what I'm going to check on these three. And I think because we have FOMC tomorrow, I'm going to look at getting in position on these other ones as well. I did price out a Coinbase trade yesterday. I took the trade for $20.25. I closed the trade immediately for $20.15 because the last thing that I wanted to check was how often did it hit the expected move, and it was like 2 out of 10. So I like to see like a 7 out of 10, 8 out of 10 hit the expected move. Coinbase had big hits to the upside or big misses, but it only happened 2 out of 10 times in the last 10 earnings. So that is not consistent enough for me to say I'm going to take a Coinbase trade. But DraftKings, Block, or Apple, we'll see what the volatility looks like on those. Sophia says if it's months on end, the swaps will be huge. Right. But think about my dollar Swiss and my Aussie Swiss and my New Zealand Swiss and my pound Swiss, Saphir. What am I getting on those trades? Positive swap. That's also a reason I'm in those trades. Positive swap. So I'm in positions right now that I'm getting positive swap. So I've collected in one of my portfolios, I've collected over $4,000 in positive swap on Swiss pairs. So and think about the difference. I mean, the Swiss is at 1.5%. The Aussies at 4.25, 4.5. The CAD's at 5. The Bank of England still above 5. The ECB is at 4.5. 4. Everything's above, right? So positive swap, everything would give me a little bottom line boost, and also the technicals line up. So my perfect storm, in a way, not counting my robot, that's the name perfect storm, but my ideal scenario in the Forex market is to get paid positive rollover to hold positions and also have the technicals aligned where I can have the pip appreciation as well as the positive swap. So it's freaking awesome. And that gives me a lot more confidence too, to take these positions, see that every single day I'm churning, $10, $20, $30 a day. And every single week it's like, yeah, that's cool. I just made an extra couple $100 and I'm also up. I mean, I'm sitting on like 7,000 pips of profit. And some traders might be like, that's crazy. Take your profit. Nope. I'm still probably another 3,000 to 5,000 pips off of my first big targets on that basket trade. Aussie Swiss still has more upside, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, all of them to me have more upside potential. So I'm going to ride them out and get to my big liquidity levels that I'm trading to. So anyway, like I said, it's passive to me. It's not price sensitive, but it's nice in this environment where we have positive swap for the first time in, almost a decade. 2023, 2024, that's the last time I remember really trading and focusing my strategies around positive rollover. It's been a long time. So I mean, when it's a race to the bottom and everyone's at sub 1% interest rate, it's pretty negligible. But when you actually have 0 to 5% out there, you can get some positive swap in the Forex market, which seems pretty nice for the first time in a long time. All right. So if you'd like to, I'm going to do some earnings plays right here. SMCI is one of them. It's already showing some movement for the week. The day is flat. The week is up a little bit. I want to see what earnings have given us so far. So SMCI is in the chip space, right? So Wall Street on edge ahead of the Fed decision. Spotlight falls on Amazon and AMD. We're going to see if that's kind of a savior of the market this week and maybe stabilizes prices, or maybe it doesn't. I don't know. I think Amazon's report is going to be pretty solid. I would expect their earnings to be decent. To the extent that Amazon possibly breaks all-time highs. I mean, Amazon's expected to be about a $15 mover. And so earnings is today after market. We're trading at 180. If we get to 195, that breaches the all-time highs. We fall down to 165. We were down here with that low from Meta. So the drop last week in Meta pushed Amazon down to 166. We could test that level and maybe come into this bigger pocket, which to me, if I look at this low to high, we pulled back 30%. I could see this retesting the high just based on that retracement. If we pull back any deeper, I'm still pretty interested in this breakout point being a buyer of Amazon and getting positioned to stay long. I am long-term on Amazon. I've got some cash secured puts. I'm long on calls right now, and I'm selling against those every 30 to 45 days to try to lower my cost basis. But I'm trying to get Amazon above $200 to take profit. Anyway, let's go to SMCI. We have AMD as well. So these two are coming out. So SMCI, I believe, is today after market. Yes, as well as AMD. So let's look at those. And then I'll also price in. Let me go option slam, price that in. Let's go free chat there. Okay, so SMCI earnings report. See what we have for expected moves. Okay, these are some big numbers. So SMCI 8.6, 7.7. Then we get into some double-digit earnings reports that are really consistent. 14.69, 18, 18, 20, 20, 21, 19, and 19. The average move, the expected move for SMCI is 19.41%. That's a lot. Let me see what that calculates into. If we go 19.41% times current price at 896.98, that's a $174 move. That's such a big move in an earnings play. There's no way that I'm going to do a reverse iron condor or debit spreads. That's going to be way too expensive. This is a trade that if the market does something with the expected move, I'm going to try to position for a high credit spread. So if I have to take let's say a $5 credit spread, I'm trying to make 350 or 375 or better. So I take small risk, high reward, and the price has to match these levels. So this is the expected move at 174. If I go a little bit more conservative, let's say that 19.41. Let's go 19.41. times 75%. Let's say we get to 75% of the earnings report and we don't quite hit the full move. That's still a 14 to 14.55%. So I'm going to calculate there 14.5% at the current price of 897.02. That's a $130 move. Okay. So I'm looking at a pretty reasonable move, $130 to $175. I'm writing that down. 130 to 175. Now I want to see on SMCI, can I place that trade on SMCI?
Hey Chris, how's it going?
What up, dude? How are you?
Pretty good.
Good, man.
You taking any trades today?
I'm looking at it. I'm looking at pricing in an earnings play on SMCI. The earnings have been pretty consistent, double digits, 14 to 19. The average is 19. So I'm going to look to see with $130 to $175 expected move. If I went out to the 10th on SMCI, I mean, earnings is today after market. We still have the Fed to deal with. Current price is, $890. It's $897. So between the $895 and $900, I would have to do something. Well, I'll show you how expensive it is. The market's anticipating right here $150 move, which is right in my wheelhouse of what I said. I said 130 to 175. If we get that $147 move, I could possibly position for an in-the-money credit spread. This would be, I'm going to go to like the 1030. So if I do a 1030 bull put spread, I can get 350 out of a $5 spread. That's not too bad. And that's also it's not super deep in the money. If I want to do like a 140, if we did, let's say 140, I get there's no way that's going to fill. I mean, that spread's way too wide. I can get a $5 credit on a $5 spread. That's never going to happen. That is wild. Interesting. So let me see if I can get this more realistic. That's what I thought. So I don't know why this jumped so aggressively.
Does it tend to move on earnings pretty hard for SMCI?
Well, the average move based on earnings with the average is 19.41%. That's roughly $175. So that's a big mover. I mean,
Okay.
anything that I see earnings that's like 15 to 20%, those are big earnings reports. And for a stock that's almost $900, that's a heck of a move. To my point, I mean, if I did an at the money here, I just want to. This is going to be like a $150 credit or a debit. If I did an at the money, if I did a 900 by an 895, you're going to pay almost $15,000 to take this trade. To say I'm going to take this trade, no way. Like that's ridiculous. So you can see here, you're taking a $15,000 trade. If you want it, no thanks. I'm not risking that much, and I'm not going to put that on the line for just an earnings report. So what I'll do instead is I'll keep my trade defined. This actually carries on with what Nick said earlier, which was credit spreads and bull put spreads. If I went to my expected move, and I think I'm going to take this trade today, Frank. If I do my expected move, which is only a 75% of the earnings report, if we did 75%, we need to get to 1030. So if I do a bull put spread, a 1030 by 1025, right now the shows I get a credit of 390. That's pretty darn good. Now the spread is wide. I might not get filled there. I'm going to put in an order right now for 390 or 375, but I'm going to try to position these together to get filled on both of them. So if I do 895, we're at 893 right now. So 893 minus the 130, I need to be somewhere around that 763 level as well. So 763, I could do a 762. I could do this 765. This would be an in the money bear call spread. So I could get 740 for both of these together. I could get, why is that so bad? That's way off, dude. Let me see what this looks like. So I could do a 770 by 775. I mean, I would take that. My risk would be $2.25. For this particular trade, if I'm doing the bid ask, let me see what I get on that trade. I feel like I'm making more credit on the bull put side than I am the bear call side. The delta, this is an 80 delta. That's way in the money on the call side. Okay, actually, I might be getting more premium on the. Yeah, I might be getting more premium on the call side. But if I can get filled at 785, that means my risk is $2.05, $2.15 right now. I'm happy to take that trade. I don't know why. See, it says max profit 290. That shouldn't be right. My max profit should actually be. All right, dude, this spread is super wide, man. Here's what I'm going to do. I'm going to take, it's a $5 spread. It's a $5 spread. It should be somewhere. If I can get 750 or better, I'm going to take the trade. So all I'm looking to do on this one, Frank, is if I take these trades, let me write this out so everyone can kind of follow along. Euro dollar, I see that for Hub. Euro dollar, look at the dollar index. I don't see the euro dollars ready to sell yet. You got to watch the dollar index for more bullishness. If the dollar index wants to sell, get stronger, then euro dollar is a good sell trade. But you got to watch the DXY. I wouldn't trade anything prior to FOMC this week. Okay, so let's go. SMCI expected earnings is around $130 to $170 move, $175 move. Let me go to the weekly. I think the weekly expected move as well. This would be daily, weekly here. Wow, the weekly average is 200. So I'm actually being pretty conservative on the earnings report. But I feel like that 200 is probably because of that one massive sell-off that we saw 2 weeks ago. That move all by itself was a $300 candle. Wow, that's a lot. So that probably threw off the ATR levels. But again, I'm just playing close to earnings. I think this is fine to calculate it.
It's a very expensive trade.
It is, but that's why I'm doing credit spreads, dude. Because if I take the credit spreads, it's not expensive at all. So if I did, at the money, okay, what I'm going to do is I'm going to do in the money. So that's ITM is in the money.
Sell puts or something.
Yep. So I'm going to do an in the money bull put spread. And so current price is at $900, right? So I expect the move is current price. So I expect the move to go $130. So 1030 would be my in the money put spread. So I would sell the 103.0 put, and then I would buy the next leg, which would be the 102.5 put. That'd be my bull put side. And on the bear side, we're at 900, so we go down to 770. So I do 770 in the money call spread. And so I'll look at the sell the 770 call and then buy the 775 call. Right? And if I can get, $7 credit or $7.50 credit or better, I think this is a good trade. The reason why is if I win on one side and I make $7, and let's say I make $7 and I lose on one side and I lose the full $3 or I lose the full $2.50, whatever that risk looks like, right? The reality is if I grab, let's just say I'm losing, $3, right? That's going to be my risk. I still walk away with $4 net credit. Now, here's what I like about this. I don't even need I don't need price to go way beyond these expected levels. I saw this in Meta, I saw this in Tesla, I saw this in Netflix. All I need price to do is test these areas very quickly through earnings. And if it does that, my $7 credit, my $7.50 credit, if I can collect that, we'll probably be trading for like a $6.50 debit or a $6 debit, and I can take the profit. So I'm not necessarily looking to get the full credit out of the trade. I'm looking to see, can I still hit like a 15 or 25% take profit? So what is, and right now I'm noticing that the spreads have settled down a little bit. The mid price is around 670. I don't like that trade. I'm going to try, here's what I'm going to do, Frank. I'm going to put in $7.50 credit on this trade. And I don't know if it's going to get filled or not. I truly don't. I'm going to go 2 contracts for $7.50. It's above the mid price. It's probably not going to get filled. This is good for the day because after market today and its earnings, I don't need to be in this trade trying to get filled. It's either going to fill me today or it's not. So if I get filled at $7.50, I'm going to put all these in as pending orders. And all I need is if price tests these levels with again, I'm being pretty conservative here too. If it tests like the $130 move, I'm okay. And I'm looking at the deltas here, like an 80 delta on the call side and a 70 delta on the put side. What's interesting is if I want to make these like deep in the money, I should probably go higher on the put side and make this a higher delta. But if I go higher, 902, I'm trading the $130 move right here. So the deltas on the call side, it's almost like it's not giving me enough credit on the call side, or the market's already skewing that this is going to be like a positive print and it's going to be going up. I'm not trying to take the trade based on that. I'm just trying to get a good fill with equidistant levels at $130 apart. So if I take the current price, go $130 up, $130 down, that's an equidistant trade. But the problem is based on option pricing, I'm not getting the same fill right now. So like I said, I'm going to put these together, try to get filled for $7.50, see if this takes. If it does, excellent. If it doesn't, it's good for the day. And I'm just going to make sure these are all good till day. Okay, because if not, it'll cancel and I won't take the trade. So put it in here. I'm only paying $500 in buying power. If I'm right, okay, I'm collecting $1,500 of credit because it's $750 times 2 contracts. My worst case scenario, if I risk the trade, my risk is going to be $500. I will take a $1,500 max profit for a $500 risk all day, every day. But the reality is, of my max profit at $750, I'm happy still making like $1 or $2, which I think is what my probability is. So anyway, let's look at it right now. Let's see if we get filled at $750.
But you're selling puts way above price.
Way above price, and also I'm selling calls way below price. And I want to explain. There's also another element to this. This does run the risk of assignment because these are deep in the money. So if my put spread and price goes lower, that put spread might be assigned, but that's why I have it as a spread. Because if I get assigned, I just close out the long side of the option. I take the risk, or I take the risk off by closing out the long side. I close out the shares that I'm assigned, and I wash it for a, if I took a $3.75 credit on that, I wash it for a $1.25 loss, while the other one is still working and hopefully making me some profit. So let me just see if I can place the trades and get filled on these. So this is good for the day, and hopefully this will fill. If it does, I'll fill in all the accounts. Dude, it filled easy peasy. I'm going to try to bump this up then. Similar. That filled really, really nicely. All right, 732. Let me see if I can get a bigger fill here. Let me go $8. If I can fill for $8, that's ridiculous, dude. $8, and let's go $8. 9732. Not filling at $8. Okay, let's try 775. Not filling. All right, so hopefully it just fills. 750 is fine. Give me something fair. It's filling at 750. All right, I'm going to take that trade in all these accounts. So 8051. Just give me 30 seconds to get through these accounts. Filling there. 911 here.
I also, okay, we talked about this the other week, but why take the risk of getting an assignment and with your bull put spreads when you could just do call? You could buy a call and sell a call at the same spot. You do 125 or 1025 buy call and then 1030 sell call.
Okay, so I'm filling in all those for 750. So your question is, why would I take the risk of the assignment? Because I'm not going to take the assignment. If the broker assigns me, I'm instantly closing out the trade. So this is what's going to happen if the trade assigns me. So the inconvenience of getting assigned is fine, but you have to remember the reason this is a spread is because even if I'm assigned, I still have the opposite trade running. So let's say hypothetically that this is the example. Okay, example
I know what you mean, but like if I took this trade and got assigned, I would get margin called. So it's like, is it worth the risk of doing something like that?
But a margin call, what are they going to do? Are they going to close out all of your positions that you have, everything in your entire portfolio? No.
They would just close the trade after like some deadline. They give you a deadline, but in the meantime, they restrict your margin, and then they count it as day trades, and then we only have so many day trades we can do.
Okay, well, so a couple things I don't have to worry about. I don't have to worry about the day trade or the pattern day trader rule because I have over 25K in the account. So that's not a problem on my end. The assignment is a sell strike. You still have the basically the hedge of that trade. So if my 1030 by 1025 bull put spread is let's say that's my trade, and then I'm assigned, which would be, so I'm assigned 200 shares long, 200 shares long at 1030. Well, let's just talk a number here. Let's say the SMCI drops to $700. If FMCI drops to $700, my 1030 is down $330 per share, which is ridiculous, and that sucks. But my 1025 long put is up $325 per share per contract, really, right? So all I have to do with the assignment is the broker assigns it, and there's two things that a broker does. Either they assign you and then you still have the long option running, or they assign you and they exercise your long option and they wash it. Because my initial trade should be, if I collected $750 on this trade, my max risk is $2.50. So if I get assigned, I know that I'm still only risking, as the trade as a whole, I'm still only risking $2.50. So like I said, for me, I don't have the pattern day trading rule. If I get assigned, I could actually have the accounts like handle some of those if I take the assignment at 200 shares, it's going to tie up $18,000. I can take all those assignments, but I don't intend to own these shares. This is an options play. This is an earnings play. If I get assigned, I'm going to exercise the long option, get rid of the trade for the original risk, and let the other side hopefully be a winner. So I want to look at your trade, because this is how I'm going to take the trade on SMCI. It's a low risk, high reward trade that, to me, the probability is I don't need to wait until the 10th, and I don't need to wait for price to blow through these levels that I put the trade on. I just need price to do what is expected. Can the market on SMCI do a $130 to $170 move? If it can, I'm going to get paid on this trade. Now, one last thing that I wanted to look at would be post earnings. How many times did we hit that 14 to 15% move? So right here, let's see how many box we checked here. So we have this one at 3 days in, we have 17%. So that one checks the box. This one at 13 days is 16.49. That's too late. I'm not holding it that long. This one checks the box. This one checks the box. This one checks the box. This one, we get to 12. We get to 14. That's just shy. This one gets to 16. That one's fine. And this one gets to 31. Obviously, that's great. This one gets to a +5 to a -8. That's actually a 13% swing. Still not enough. And then this one gets to 25. So we have 7 yeses and we have 3 nos, which means that 7 out of 10 times this has hit the expected move of at least 14 to 15%. Now, the actual move is 19%, which is way beyond what I calculated. If it hits that, Frank, this trade is an easy win for me. And I can take that $7.50 credit and probably close it for a $5.50 debit or a $5 debit, walk away with a couple $100 profit.
Is it hitting this after, you said 13 days is the threshold?
I'm not going to, my trade is not out to 13 days. I'm taking the trade to the 10th. And so my days to expiration is 10 days out. So I'm looking at, I need this calculation to be within the 8-day window. So anytime, so these are all within 8 days. These have all hit the expected move within 8 days, which gives me the time to take the trade.
Okay.
Okay.
And
So
I did a setup on SMCI with the bull calls and the puts, and it was more expensive, which I see why you don't do it.
Yeah.
So
what did you do, by the way? Did you go out to the 10th? What did you look at for a bull call?
I was looking at the 10th, and
okay.
Yeah, it was more costly. So
yeah,
it makes sense, but I mean, I guess not for a smaller account.
So I was gonna say that might be the only thing holding your side back is the smaller account. I don't want anybody to ever have to take a trade where it's like you're flagged with a day trading thing or it takes out margin, or that's obviously a pain in the butt to be kind of on the outs with your brokers. You don't want to do that. But also with trades like this, it's like assignments only happen about 7% of the time. So it's not that common. The assignment would be, this is the assignment risk. If I do, an in the money bull put spread and an in the money bear call spread, if price goes all the way up here, there is certainly a chance that this call side could get assigned, right? If it goes all the way down here, there's a chance that put side could get assigned. So I understand that it's not a risk-free trade, but like I showed you, because I have it as a spread, the assignment is just an assignment that I can still exercise the long option to still make it a defined risk trade. So it's not like this is defined risk and all of a sudden the assignment's like, oh crap, what did I do? I got assigned and I'm screwed. Never. You always have the other side of the trade, which is why it's defined in the first place.
It's not, your overall profit isn't going to change. It's just your margin is going to be gone.
Correct.
And that's the problem where if you get flagged too many times, they limit your margin, and then they count that as a day trade because you got assigned, and you don't want to close out of that because that's another trade. So it's they're very strict and
What's the solution? Get over 25K, dude.
Yeah.
I mean that also, it's like that's what you're working for, is like get that thing over 25K, and then this doesn't apply and you get a lot more permissions to trade. But you'll get there. And anyway, so that's SMCI. AMD, let's look at the same thing. It's kind of the same space. I did get burned on AMD the last time. So right in here, I did a volatility play on AMD and I ended up losing about 50% of that trade. I think I took it. I can look at my trade history here. Let me go to equities on demand and let me look at AMD, because I took a trade based on what should have been high probability, and price was chop suey, and I didn't get the trade that I wanted. So let me search for AMD. I did a reverse iron condor on AMD, paid $6.33, and I took the full loss. So I wanted to see if I could get it out to expiration, win an extra week, and it did not get me into profit. So I took a loss of $6.33. So as a lesson for that, I'm going to look at calculating the same type of thing, but instead of doing a reverse iron condor, I'm going to do just what I did on SMCI, which is do a credit spread. If I can walk away with, I'm going to do the same thing, dude. Amazon. So the same thing on Amazon. We're expecting, you and I calculated this out last week or yesterday offline, but I think that Amazon is a pretty good hit for like a $15 move. Here is Amazon right here. Let me go to Amazon. And let's make sure that we get the high probability of Amazon at least hitting the expected move. As long as we do that, Amazon's a good trade. It's not super expensive after the split. So, okay, so the average move on Amazon, and this is what I'm looking for, is it consistent? So we have 4%, that's low. We have 8, 11, 12, 14, 12, 9, 9, 8, and 8. So 8.36 to me is pretty solid. It's right in the wheelhouse. 8.36. I'm happy with that as a, it's not showing averages of 12 and 9, and all of a sudden it's like the mean is, 15%. 8.36 is very realistic. So let's do 8.36, and the stock is trading at $180. So $180.94 times an 8.36 average move. That's a $15.12 move. That's what I expect Amazon to do. Now, for a $15 move, there's 2 ways I can trade this and 2 ways I can trade this out. I'll go one more thing before we jump into the charts and jump into my broker platform. How many times out of the last 10 earnings have we hit 8+%? That's all I need to see. So we have 6 to 7 to 7 to 6 to 9, 8 days later. So as long as I go out to the 10th, I can hit that level there. That checks the box. This one, 5 days in, gets to 11%. This one, 9.42, day one gets there. Negative side, this one does not get there. 8.43, 8.43, 9.57, that one gets there. 11.76, that one gets there. 10.32, that one gets there. 10.19, that one gets there. 12, that one gets there. And then 4, this one does not. So we have 1, 2, 3, 4, 5, 6, 7, 8. 8 yeses and 2 nos. This doesn't mean it's a guarantee, right? This doesn't mean that Amazon is going to pay me this week. But based on the probability, this trade is pretty solid for the market to at least move Amazon the expected move. I think as a Mag 7, again, I'm speculating, of course, but as a Mag 7, just like we saw with Meta last week and Google and Microsoft, they all wanted to move. And so I think Amazon would be a good position to, one, put in some credit spreads if you want to be cost effective, put in a reverse iron condor, or what you like to do is just do those like really tight debit spreads and kind of have it be like a 1-to-1. I'm going to price it out. So the nice thing is it's exactly what I want to see. Amazon is today after market, and let's go Amazon. Then we'll do AMD. So let's go Amazon here. And if I go out to the 10th, which gives me 10 days out, we're currently trading at 180 to 182.50. That'd be the split. So if I did a 182, I'm not getting any. There we go. I'm like, I need to fill these prices in. Come on, Tasty. Okay, so I'm expecting to see a $15 move, right? And the market is saying that I'm going to have to pay $14.40 for a $15 move. Now, here's what's kind of nice about this. If we go to the expected move, which has happened 8 out of 10 times, if I did a 182.50, or if I want to space this out and say, look, from 177, I'll make it a little bit cheaper. Now I'm paying $13.22 for approximately $15 move. So from 182, if I sell that 197, okay, from 177, if I sell the 162, I'm only paying $9.43 to make a $15 move. Now, what I will probably do if we have some higher volatility, let's give Amazon some more upside. Let's see if Amazon can get to, that'd be a $17.50 move. Let's go to $22. Let's give me some more upside here if I'm going to take the trade. And then the downside, 177, let's go to 157. Now, this is a little bit more favorable as far as if we have a bigger move, I could pay $11.20. The market is expected to move $14 to $15. If I get that move, Frank, I can take this $11.23 debit and close it out for a $14 or $15 credit. That is enough for me to be happy walking away on the trade. If I wanted to let it, blow through expectations one way or the other, then I can close this out for potentially this is up $20, right? I could close this out for $22.50 on the call side, and I could close this for $20 on the downside, which paying $11, I make $9 here, and I would make plus $11 and change here. So I'm giving myself a pretty big profit window if I wanted to see price blow through the upside or downside. But realistically, if we just did the average move at $14.44, or my calculated move over $15, if we get a $15 move, I'm taking about $3 to $4 credit right there. I like the trade. So I'm going to take an Amazon trade this way, where I just look at Amazon as, let's say we have an expected move that's good. or bad. I don't care. But if we get a $15 to $16 move, that's enough for me to take some profit. Now on this trade, I'm only going to take one contract because if I lose, and I'm going to lose $1,100 here, I don't need to lose less than, this is about 0.5% on these accounts. So I want to lose less than 1%, and it's just an earnings play. But I like the trade, and 11.22 debit's not bad. So I'm going to go ahead and take the trade right now on Amazon, and then I'll price out credit spreads. So let me go here, price this out, see if I can get filled. Pending at 11.25. Let me move these around. So 11.22 debit's not filling. I'll try to get filled at 11.25. If that fills, I'll try to get all the accounts filled with the same price. Not filling at 11.25. Let's try 11.30.
You went as far as 150?
To the downside, 157. I'm going $20 apart.
So spreading them out gives it more room for profit to run, is what you're saying?
Yes. So if priced, go ahead. So if you so sometimes the trades you've sent me, if you put in like the long put and then you cap it at $5, the value of that sell side changes so rapidly that you won't see the full profit until expiration. So what I'm doing is I'm going a little bit beyond the expected move to let my profit run before this trade is really threatened and before the value changes where it affects me.
Okay.
So I tend, so the move is $15. I'm going to go out $20 because that way, if it's beyond the expected move, I can capture more profit right up front. If it's not quite the expected move, I'm still letting price move. And if we hit that $14, $15 level, the real value of my long option is still going to be offering me that $14, $15 profit, and I can take it. I don't have to sit on this trade until the 10th.
Gotcha.
That makes sense? Okay. All right. So 11.25. Let me try 11.25. That's not filling either. So let me go 11.26. Filling at 11.26. All right. So I'm going to dance a little with the broker platform and get these all filled.
So you're going out to 205 on the call side, and then you're going to 170 or 157.50 on the sell side.
Can you see it right here? So I'll type this out for you.
Yeah, kind of.
Okay. So it's
177.5.
77. Okay. It's the 182. 182.50 by 205. That's a bull call. And then a 177.50 by 157.50 bear put. And I'm getting filled here for an 11.26 debit. And the expected move is $15, which, again, probability wise, I should have a pretty good chance of making $3 to $4 on the trade, but I'm giving myself a max profit of $20 on the put side, and I'm giving myself max profit of $22.50 on the call side in case there's a blowout. So that's the good thing. Now let me double check and see what accounts I have. So that one got filled. This one needs to be in. So let me take a similar trade here. And similar, 8051. Get this going here, 8051. Perfect, getting filled at 25. That's awesome. 911. Okay, similar. And also what's nice about this too, Frank, is if I wanted to sit on this through FOMC and through non-farm payroll, and even in the next week, I think Amazon has enough in it and enough catalyst this week to drive that thing to the price that I want. So if I don't have an immediate reaction to profit, then I can still see a reasonable probability that I still get paid on this trade by next week. So that's, kind of a fallback plan in case it doesn't deliver, right away.
Okay. Well, cool.
And then lastly was 9072, and then this trade is done. So 9072.
The majority of those moves happened within the first 3 days, right?
Yeah, within 1 to 5 days, that's when most of these have triggered.
So I'm looking at your positions when they're out a week. Can they realize full profit? Say like a day or two after your trade. Like say it runs pretty heavily in your favor on like the first day.
Yep. It'd have to go way beyond it. The only way I'm going to get close to full profit would be we'd have to go from 180 to probably like 215 or 220. And then I could realize that max profit right there because I'm just so far in the money on the long side that because I have still some time premium in that long side, if it happened right away, I could max that thing out if it was like blowing through my sell strikes. But for the most part, what I'll probably end up seeing is if we have a move that let's say it goes $20, if I get to 180 and this is trading up at $200, I'm realistically probably seeing this thing trade at like $14, $13, $14. And I'm going to take the profit.
You'd be happy.
Yeah, I'm going to take the profit. Yep. Because for me, if I get, let's say that, let's say I'm looking at the credit and it's trading. So let's go, I paid $11.26. Okay. So $11.26. If I take a 25% profit, I need this to trade at 281 over what I paid. So if I'm trading at anything over $14, I'm probably going to protect it, because anything over $14 is a 25% take profit. That's a very safe, very high probability move for me in the earnings play. Obviously, I'd like to make more than that because I'm giving myself $20 to $22 of upside. But if I'm at 14 plus credit, I'll just take the profit and be done.
Gotcha.
So that's still, that's, what is that? That's still over $200, right? If I did 11.26 times 25, I'm still making $2.81 a contract. So I make $281 a contract. So that's it. So that's Amazon. And then I know it's 11:05. We can probably run here, but I'm going to do one more thing. I'm going to jump right into my trading room, and we're going to do the exact same methodology, exact same process. With AMD, though, because I got burned right here, I'm still willing to take the trade in AMD, but I think I'm going to do it more with credit spreads like I did on SMCI and take a very low risk trade and see if it looks pretty good. So I saw a bunch of questions in here, like look at gold, look at the dollar. Very quickly before we go, Frank, I know we have FOMC tomorrow. I would encourage everyone that's following along today as well to tune into the trading battle tomorrow. Nick will be hosting. Myself and a good friend of mine, Gary Fickart, will be the battlers, and it's going to be a wild day. We're going to have lots of stuff to trade, and I'm curious how aggressive. Gary's a aggressive trader by nature, so I'm curious what he does, and I've got an interesting plan that I'm looking to digest tomorrow and see how crazy active do I want to get. But dollar index, I think I'm looking for dollar strength, but the one thing that could happen on the dollar with the earnings this week is the earnings. Think about this. The Fed could be neutral, earnings could be positive, or we could have Fed neutral, earnings positive, and the market is going to be noisy, capped at the upside, capped at the downside, but a very, volatile week with no direction. If we have earnings positive, Fed is hawkish, that's going to be almost like a neutralizer, but it can be very volatile that way if we have opposing views. If somehow we have earnings positive, Fed dovish, I think this market rips hard. It still struggles at the highs, but we probably have a surprise move to the upside. And then if the Fed is, hawkish and the earnings come in lackluster, then we could have, another aggressive sell-off to put us at some fresh lows for the week. So I'm still not convinced that this market can go higher. I think we need a correction to the downside. So high, low, lower, high, lower, low. I'm still looking for that. The big play this week with how the market digests the FOMC is if we can break these lows, this is going to make, it's going to make it feel like the world is ending. But the reality is it's just a healthy correction. I'm still bullish on this market overall. And I mean, it's going to be disappointing to wipe away the gains for 2024, to be up 11% and wipe them all out. But at the same token, if we are sitting right back to flat, I still think there's a chance we could rally all the way back up to the highs and possibly go higher. It's just stuff has to look better, I suppose. And maybe it's going to be an interesting summer and certainly an interesting election year. So, but that doesn't matter because, Frank, we're trading for today. We're trading for tomorrow. So that's what I'm here to do for right now.
True.
All right, dude. Yeah. Hey, you and I can take this convo offline. I'm going to jump into my trading room and continue with some earnings plays. And I'll see you tomorrow.
Sounds good. I'll talk to you then.
All right. Thanks, man. Thanks, everybody. Take care. Bye.
Bye.
Our Edgefinder anniversary sale is almost over. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.